Well, thank you very much for having us. Very much appreciate it. Appreciate the opportunity to be able to share with you some of our experiences and perspectives during this challenging period. Let me just make a preparatory remark. We're living in a very unusual time, a very challenging time. There's a lot of uncertainty about the eventual course of this virus. There is a lot of sadness about those who are ill, those perhaps who have been lost. And so it's a time of anxiety, it's a time of uncertainty, and yet, for many traders, it is a time of unusual opportunity. Mike and I work together at SMB in New York, and we are seeing traders do very well, in many cases, having record months and record years. And so it is a strange time when, on one hand, we are sensitive to what's going on in the world about us, and on the other hand, in our work as traders, we have to stay focused on the unusual opportunity that is in front of us. Talking about that opportunity is a big reason why Mike and I are here today. Okay, so let's talk about a few themes, a few common threads among people, traders who are doing very well. And when I say very well, Mike is too modest to brag on this, so I'm going to do it for him. There are traders who, so far this year, we are 1/4 into the year, right? So far this year, they are making 6 figures. They are making 7 figures. They are doing unusually well. What is it that we see them doing? The first thing is teamwork. I see this with the hedge fund folks that I work with as well. At a time when we are socially distanced, they are making extra attempts to stay connected. They're staying connected just in their chat, maintaining a positive opportunity focus on markets. They're also maintaining what I call information flow, which I distinguish from idea flow. Information flow is real-time color. This is what I'm seeing now. This is what's moving. This is what's breaking out. Look, the S&P is strong, but look, the small caps are not making new highs. That's information flow. Idea flow, on the other hand, is bigger picture. What is setting up? What do we see as good risk reward during the day or maybe even beyond the day? And that's a big part of our preparation for daily trading, is sharing ideas. Where teamwork has been extremely effective, both at hedge funds and in proprietary trading firms such as SMB, is in both real-time information flow and sharing of ideas and research as part of preparation for the day. That means that through the day, traders are engaged, they're active, they're interactive, they're talking aloud, and that flow of information is feeding their heads and helping them see things. It's increasing their bandwidth, helping them see things that otherwise, in fast market conditions, they might miss.
We recently, Dr. Steenbarger and I, had monthly review sessions with all the guys at our desk. The way we do this is we have our firm floor manager, Dr. Steenbarger, myself, the team leader, the junior traders all meet as teams. So there are several teams at the firm, and everybody goes over their month. They talk about what they did well. They talk about setting goals for the next month. They talk about what they can do better. They crunch their statistics in a terrific tool we call TraderView. They're not just telling us how they feel or how they think. They're bringing statistics where they've measured certain trades that they make. All the trades have names, and they're bringing those statistics to us. And Dr. Steenbarger, I know, just to put the performance in perspective, I know that you have been mentoring us, coaching our traders for over a decade, and I think we've been doing these monthly meetings for, I can't even remember for how long, and we spent the day, a whole Thursday, doing these meetings, and I can just say from my perspective, I've never felt more proud of the performance of our traders than the last couple of months, last month in particular. I never felt better about running a prop desk, and we've been doing this since 2005, than after our monthly reviews with our traders. And specifically, traders on the desk were saying things like, and this points to the importance of team trading. You know, one trader, who I know you know really well, said, I would have made only $10,000 last month if it wasn't for my team. And the trader, third-year trader, had put up north of $300,000 last month, his best month ever. Teammates were saying to each other, I really appreciate what you're teaching me for this month, and saying this to lesser traders in terms of P&L. You know, traders who are making more were saying this to lesser traders, saying, I really appreciate you teaching me XYZ, which enabled me to make a lot more. So teammates were recognizing other teammates, and of course, they were recognizing help from Dr. Steenbarger and the firm. And so the idea, and what we're seeing with team trading, is guys are using each other for support. And in terms of support, I think you said it really well, and it's the exact tone that I hope we're conveying during this presentation, which is, look, I mean, last month was our highest P&L month ever. And if you ask me personally how I feel about it, it's completely unimportant because of everything else that's going on. But in our job, you know, we have to share what's working and how guys are feeling about their job, which is mixed into the whole world. And they're leaning on each other. They're building technology together to make more. They're sharing ideas, and they're attributing, you know, that success that they're having to that working together. And so the question for independent and retail traders is always, well, how do you do it? And it really just starts with reaching out to like-minded traders on Twitter. If we ever get back to the point where we get to go to a live Money Show event, like traders at the Money Show, and just start, and just reach out to somebody and start that conversation.
Yeah, just to jump in, Mike, I can't emphasize that enough. If you are an independent trader, finding teammates, finding people to reach out to, people you respect, people who will share ideas with you, so valuable. You can form your own teams even from working independently, individually from home. You can create your own teams by connecting with people from chat rooms, like Mike says, from Twitter. You may be taking a course like through SMB Education. You're going to connect with people. Some of those people are going to be motivated, creative, talented people. That becomes your virtual team.
And I'll say
Okay,
this,
so
one
let's,
more thing.
oh, good.
Let me say
Oh,
one more
go.
thing. So there's one team that we have in New York who we love, and they're going to become the very best team in the niche that they trade in all of New York. They have a trader on the team that offered something new to these guys, and everybody was complimenting the contribution of this other trader. And I was surprised at how much this lesser trader had contributed to these bigger traders. And I was surprised at how grateful they were to this lesser trader. And as somebody who runs a firm, I wasn't aware of, and we believe in team trading from the beginning to the end. I wasn't even aware, even believing in it so much, how much of a contribution this other trader was having to the traders who had excelled in the past and were really excelling. So think about adding that to your trading.
Yeah, each one teach one. Everyone's learning from everyone. It's a huge theme. There's someone on that same team, by the way, Mike, who's been goosing the other team members to bump up their sizing, take
Yes.
more risk.
Yeah.
And that has worked very well. You know who I'm talking about. That has worked very, very well.
Sure. A lot of the other traders are very diligent, and there's another trader who's a natural risk taker. And diligence plus pushing from natural risk taker is a good result.
Yeah, everyone has strengths, and in sharing the strengths, we make each other better. Remaking your trading. You know, the world changed, obviously. The financial world changed. Our world changed. In the beginning of the year, low volatility and upward trend, and boom, you know, here comes the virus, here comes selling, here comes volatility. And so the traders who have been very successful, that to a person, they have remade themselves. They have remade their trading. They have adapted to the changed market conditions. Part of that is looking at what is working now. They're constantly updating. They're constantly viewing and reviewing the markets and seeing what's working, and they're trading what they see, not trading a preconceived set of ideas. Now, what that means psychologically, and this is really important, is that to some degree, even the most successful and experienced traders have had to be humble. They've had to acknowledge this is new, this is different, we haven't seen this. And so they return to their learning curve. They go back in some way, they go back to the mindset of the newbie, going through the learning curve and seeing what works. It's that willingness to be open-minded, to be humble, to relearn that I've seen among the best traders during this period.
I started today, before diving into screens, by tweeting observation trading. Watching what the market is doing and reacting can be so profitable. We're seeing that as a common theme amongst even the best traders. Retail independent traders often tell me they think trading is a lot about predicting what's going to happen, and that if you can't predict the bottom and you can't get out at the top of stocks, then you can't make a lot of money. And we're seeing, particularly when VIX is 60 plus, that isn't the case. I would say that that's not the case in any market, but we're not seeing that with our elite traders. And so you hit upon a really important point. And so I think it was about 2 years ago, I reached out to you, Dr. Steenbarger, and I said, look, our guys are really good traders. Their performance is exceptional. Lots of guys are outperforming other people in their space, and they were doing so when volatility was below 15, below even 12, hovering around that 12 area. We're in this historically low VIX environment. And our top traders found ways to excel in that type of environment. And that's the hardest environment for traders to make money in. And they were so remarkable in that they found these ways to do it. But then we saw these pockets where volatility would spike up. And we'll recognize that by looking at the VIX futures for lack of for the way that we do it. And so I reached out to you and I said, market plays is something that our firm needs to get better at. I was unhappy with our performance as volatility was picking up as to how to trade market plays better. You know, in the past, they weren't as important. Maybe one day out of a month, maybe 2 days out of a month, there was a big opportunity for market plays. But then as volatility was creeping up, there's a little bit more, it was becoming more important. And so we sort of sat down and we had a new boot camp. And you introduced traders who were multi-million-dollar traders, to some of them, to ideas to trade the overall market better, how to look at pick, how to look at ADD, how to look at patterns forming, how to think about how they can do better on these specific types of plays. And the guys who last month and the month before, who were really wonderful traders, were open-minded to learning more. And over the last couple of years, it wasn't really overnight. They were, trying it, working on their game, having a little bit of success, getting knocked down a little bit, coming back, smoothing out how they're actually going to attack certain market plays, for then preparing themselves for market opportunity like last month, where they did exceptionally well. And some traders went from 0 to big numbers in a very different type of trading. Just because you're good in a low VIX environment does not mean that you have the playbook yet to be really good in a high volatility marketplace. And the way you trade in a low volatility environment is completely different and should be completely different than a high volatility market. And we would teach and focus on things completely differently in a high VIX environment. We say things like nail and bail, whereas prior to that, we would say things like find something that's independently stronger and weaker to the marketplace and try and put a swing trade on, or try and hold it as an intraday swing trade. Now we're saying things like look for momentum trades, whereas in the past we'd say look to buy before the stock breaks out. And so now we'll say things like you should also open up a futures account. And we'll start our AM meetings talking about SPY and Q and volatility products like VXX and UVXY and TVIX. TVIX is something that we made very little money in before last month, and it was our biggest name across the board. But it was because Dr. Steenbarger stepped in, we had a boot camp, guys were open-minded to it, even the best, willing to learn, willing to add to their playbook, that brought and bred these tremendous successes.
Mike, that's so true. Just let me jump in very quickly because I want to be sensitive to time. I know we want to have time for Q&A. In a low VIX environment, what I would hear from traders is what level in this stock or what level in the market is holding. And they look at what's holding and they want to trade off that level. Now, in the higher volatility market, they're saying, what is the range we're breaking out of? And is that breakout likely to continue? So it is more of the momentum pattern. It's a great example of adapting to a changed market environment, even on the short term. Okay, I'm going to introduce a point that is important to trading psychology. It's important to trading. And that is your success as a trader is just as much dependent on what you do outside of market hours as what you do while you're trading. And we see this particularly in the quality of the review processes that traders use. They're not just reviewing their trading, they are reviewing their trading. Mike, you know that one young team that produces
Yes.
a monthly report like 100 pages?
I think it was over 200 pages.
Or two. It was like an encyclopedia. Every single trade they placed and why they did what they did and what worked and what didn't work and what conclusions they could draw. I mean, it was a detailed review, and there are other folks who do page after page of monthly reviews. They are going over specific trades. They're not just reviewing their overall performance. Oh, I lost money, I need to be more disciplined. It's not that at all. They are reviewing specific trades. They're saying, where could I have entered better? How could I have executed better? How could I have sized this better? They're looking separately at the ideas that they're trading. Was I in the right stocks? They're looking at the quality of their executions. They're looking at their position management. Okay, I took some off here. Was that the right place? Should I have let more go? And they're looking at decisions about their sizing. Was I big enough in this trade? It's out of this very detailed review that they create concrete goals for the next week or the next month. And then, and this is really important, they maintain accountability for their goals because they start their next review with a discussion of the goals they had set during the prior review. So they're holding themselves accountable. How did I do on my goals from the last review? That's
I remember
that's
meeting
the
those
learning
two traders.
process.
Sorry to interrupt there, Dr. Steenbarger.
No, go for it. Go for it, man.
So, and look, I know there are retail and independent traders listening to us share right now, and I'll just supplement what you said with a story about how I actually met those two traders who are two very promising developing traders on our desk who we've hired and couldn't be happier about. If we could hire 100 of those two traders, it would make for an even more enjoyable career and job. But I had these two traders and they were reaching out to me via email and sharing their review work that they had been doing, sharing their playbook trades. So the way that we put together our trading business at our firm is to archive setups that make the most sense to you each trading session, break down the variables, decode the trade, and then put them into a playbook pointing out things important on the chart, a news catalyst in it, order flow, reading the tape that was meaningful, and how you're going to overall trade that particular setup. And so they were sending me this work and we would just exchange these emails back and forth. And I know nobody's better at exchanging emails than you, as you are the most generous person in the trading community. And I was exchanging emails with them and they were thoughtful and I enjoyed the exchange. I happened to be going down to Tampa, Florida to watch spring training with my son and my dad, and knew they were from Florida and said, hey, if you want to grab breakfast, I'll meet you during the morning. They drove all the way down from Orlando down to Clearwater, and we had breakfast. And they're smart as can be. You know them very well. It comes across in every word and right away. And they handed me their playbooks. They weren't a part of the firm. They weren't officially connected, but yet they were doing the work that our guys do outside of the firm and showed it to me. They didn't say, I want to be a great trader. They showed that they wanted to be great traders. And I remember leaving that meeting. I don't have a lot of meetings that way, like that. I meet a lot of people. I have a lot of conversations. I can remember conversations as impressive as that on my hand, and we've been doing this since 2005. They handed me their playbooks, and we've gone on to hire them, and you know, couldn't be happier about them. So this stuff really does lead to performance, and they've started really well at the firm. So just quickly, we have mentoring sessions at our firm daily for our developing traders. We have an AM meeting, and you can see our floor manager leading that right now. Here's some of the traders at our firm, some of our traders, some of our developing traders, and some of our interns and some of our SME training students. We have a bunch of meetings during the day. We have an AM meeting. We have a meeting after the open to go over the best plays from the open. We have a reading the tape session. We have a playbook session. And then we have senior guys come in and share what's working for them after the close. Innovation, Dr. Steenbarger.
Yeah, just a few basic points because I know we're getting on in time. Doing new things. We're seeing traders who are successful in this environment doing things they've never done before. I've had a number of conversations with traders who tended to hold positions longer, and now they are scalping. Now they are trading shorter term, taking profits more quickly because they see that's what's working in the current environment. If we break out, that move is likely to extend. And then once it extends, boom, like you said, Mike, nail and bail, they're taking those profits. Some of them are doing old things in new ways. That breakout trade is a great example. That's an old style trade all the way back from the opening range breakout work that was done by Toby Crable. We're seeing breakouts work at certain times of day. You know, take a look when markets are most liquid or when stocks are most liquid, and look at breakouts from ranges as a function of time of day. And during those more liquid periods, there's more volatility, and the breakouts are more likely to continue. And finally, they're studying new patterns. They're building models. They're doing some quant work. There's some work I posted on my blog about breadth spreads, looking at the difference in breadth between large cap and small cap stocks. And in the recent environment, that has killed it. That has been an excellent indicator. There's another indicator I'm working on currently that looks at momentum and stretched levels using volume-based bars, not time-based bars in the market. And sure enough, we're seeing when markets are more likely to revert, when markets are more likely to extend. People are innovating in response to the new environment.
So this is a picture of Swang, who's one of our top traders and probably one of the best intraday active traders there is on the street. Hands down, hard to find somebody. I'd actually might fight you if you told me somebody was better than him. I wouldn't believe it. And so one of the things that he's done, and we've encouraged him to do, he was a very good active trader with equities. And a couple of years ago, we suggested, hey, can you express some of those trades also with options? And he did. And, you know, he's added an extra couple million trading options in short order. And then we suggested for him to trade futures. And you know, last month he made significant P&L just trading futures. But the key to that with your innovation is, can you do what you do best in other products that will bring significant and meaningful P&L? And lots of times people who are equity traders just stay there, but maybe you can express what you're doing with options, and particularly when volatility is really high, perhaps instead of just trading SPY, you can think about expressing those trades in futures. And then also, of course, if you're just a good active trader, well, Sunday night's a good time to make money these days. That didn't used to be the case when I first started trading, but you know, it is now. Asian markets open and have a huge influence on our US markets, and there are overnight moves that are pronounced and important. and you don't want to miss them. And so, and then the other thing that somebody like Swang is doing, and other guys do on our desk, is they team up with other traders. In this case, Swang joins up with a junior trader, and they share ideas and share an account. They have a separate trading account, a joint account, where the junior guy's giving the ideas, is doing the execution, and the senior trader is saying, good idea, go for it. Helps the junior guy to trade bigger, helps the junior guy to create a track record for success. And then the senior guy may flip over to his account, take the idea that the junior trader and he collaborated on, and trade it with size. And so getting an extra set of eyes and ideas is a good way to innovate as well.
Super quick observation, Mike, about Swang. One of his strengths is limiting his risk to reward with very short-term trading. And so his innovation using options was that he was able to use puts and calls, again, to limit his risk, but now he could hold positions longer. So it extended his time frame, but kept his psychological advantage of holding the downside, and worked very, very well for him. I'm going to be super quick here because we're moving on in time. Maintaining the right mindset, reducing distractions, and there's some things on my blog, traderfeed.blogspot.com, about this. Reducing distractions during the trading day, breaking up the trading day, taking a break midday. When things are moving so quickly and so many things are moving, it's easy to get fatigued in the cognitive sense. We get overloaded. We lose our focus. Taking a break during the trading day allows us to regain that focus. Maximizing our well-being and energy, doubling down on our exercise level, doubling down on having fun and doing interesting and rewarding things during the day that will refresh us for the trading day. And finally, I'm hearing this from hedge fund folks as well as prop folks, selectivity in trading. If we try to follow everything, we don't follow anything very well. So really focusing on where we see the greatest opportunity, being very selective about those trades and making the most of those.
Let's skip ahead and get to the bottom line, Dr. Steenbarger, and then save some time for some questions.
Great. And you see what I wrote down here, as far as the bottom line, that this is a unique period of market history. A coping mindset isn't good enough. We want to be in an opportunity mindset. But I'm going to add something that's not on the slide. And maybe this is the most important thing for attendees. You are meant to do important and special things with your life. Period. Life is too short to be mediocre. Life is too short to be me too. You want to make the most of your talents and your interests, your passions. By learning and relearning in markets, you can make great things happen as a trader. But the dynamics of what we're talking about in terms of performance apply to all life. So whatever your area is, whatever you pursue in your relationships, in your work, in your trading, don't settle, don't settle, don't settle. You're meant for something more.
I'll make 2 points for the audience. In this picture right here, this is a picture taken while a bunch of us were at Traders for a Cause in Las Vegas, when there used to actually be in-person seminars. And 2 of the traders in this photo, Dr. Steenbarger knows everybody here. 2 of the traders in this photo are some of the great active traders in the US. And one of those traders, 9 months into his trading career, was seriously thinking about quitting. I remember him reaching out to me, reading his email, us having a phone call, and me suggesting give it another 6 to 9 more months. And he did, and he's one of the very best active traders in the country. Not yet, not yet, not yet. And so this takes time. And if you are somebody not doing as well as you want to do, think about that trader who we call Legend. That is the nickname he has earned from his colleagues, because he was like you. There is a real learning curve at the beginning. He had excellent education. He had an excellent mentor. You need that. You need great training and great mentorship and time and some ability. And one of the other traders in this photo, I look at and have a huge smile on my face, because he's probably the trader who's grown the most since the beginning of his trading career than anybody that I can think of. He started as a college intern. I remember at a firm. I remember meeting him back then, and has become into one of the really great home run hitters, just explosive active traders on the street. And it wasn't that long ago that in his first year, he barely made any money. And the second year, he didn't really make any money until the very end of his second year. And now is a multi-million-dollar trader. And I'll just sort of say, in terms of production, because I do think it's our job to share what's possible as a trader. So earning a black shirt is a huge deal on our desk. You earn a black shirt if you make $2 million in net P&L. That's a huge accomplishment. It's almost a career accomplishment for guys to look to. And this is Shark, one of our top traders, earning his first black shirt. And I remember him, he worked a long time to finally get it. And then to put last month in context, it took him a long time to finally earn that black shirt, making over $2 million in a year. But in 1 month, he was able to earn way more than that. And there were several traders at our firm and at other firms who we're in contact with who were able to reach those levels. It starts at the beginning. It's there's lots of things that go into it, but not yet, not yet, not yet. And as Dr. Steenbarger said, if you're going to do this, what's the point of doing this if you're not going to try and become great? On that note, we'll take any questions.
All right, thank you for the presentation, gentlemen. We do have a few questions that have come in. This one is wondering, in reference to when you mentioned Swang's approach to expressing his edge through options and equities, if you could elaborate more on how he does that.
Yeah, so some traders are really good at timing. I think one of the things that we've done particularly well at our firm, at SMB Capital, is we have built traders that are not only able to make very significant amounts of P&L, but able to do it with really good ROI, really great Sharpe ratios, meaning they make a lot, and relative to how much they lose, those spreads are impressive. And so because traders are taught how to read the tape, and because traders are taught to be active traders and understand what really moves the stock, they're able to see the beginnings of moves and able to see really good risk reward opportunities based on their training. And so you can express those ideas very short term with equities. You can express the ideas very short term with other products, but you can also, in the right types of opportunities, express with great timing some medium term ideas with options that will pay better than if you didn't have those timing skills and didn't understand the importance of catalysts, both news catalysts and technical catalysts with stocks.
If I could just jump in there, it's a great question. Thank you. I don't think a lot of Swangs and other traders' options trading is for long term. They're using short term options in many cases, but it's allowing them to have overnight exposure with limited risk. And I think that's the really important point here. A lot of market movement is occurring not during New York Stock Exchange hours. And so if you want to take advantage of moves that occur in Asia and Europe, this is one way of doing it in a good risk reward fashion.
All right. We had another person ask, they say, as a poor college student, how would you suggest to develop one's skill for reading the tape?
As a poor college student? Was that what you said?
That was how he started the question, correct?
Yeah, so we have
Mike, can I just jump in?
Yeah. Sure.
So I'll tell you a very quick personal story. So I was a poor graduate student when I started trading, and I did something that I totally don't recommend to any human being on the face of this earth. I borrowed money against the value of my car and used that for trading because I wanted to learn. Now that's stupidity. I could have lost my car. But we have simulation platforms that are great for learning trading. SMB uses those. Mike can talk about those. And so you don't need to be a rich student in order to learn trading.
If you go to YouTube and you go to our YouTube channel, SMB Capital, go to YouTube and search for SMB Capital, and then search for reading the tape, you will see a series of videos that will get you started. In fact, the most popular video that we have ever done on our YouTube SMB Capital channel is reading the tape.
Valuable resources.
All right. Another question came in. They're asking, what does the top trader do for reviewing? For example, they're highly profitable, so the way they trade their playbooks are obviously trades that work, but how do they then grow?
Mike, can I take that? That's an excellent question. But the reality is that not everything does work. The top traders are tagging their trades. In other words, they are identifying, are these longer term trades, shorter term trades, are these momentum trades, are these pull-in trades? They are labeling, tagging the types of trades, and they're seeing which ones are working, which ones aren't. Even with the best traders, it's not like everything is working. And so they are learning every single month from what's working, what's not working. They're looking at how they can improve what's not working as well. In some cases, they're looking at what's working and focusing on goals of sizing it up. So just because it's working doesn't mean you don't review it and create goals out of it.
Well said.
I try.
All right. Another question, are your traders using tape reading when trading SPY, QQQ to the same degree that they do on individual equities?
That's
No.
a really good question. Do you have a sense for that, Mike?
No, I think it's harder certainly to read SPY and QQQ. There's much more volume being done, so it's a little bit harder to notice the turns for particular stocks. They do use it. There are times when you can see some order flow, support and resistance in SPY, but you're going to use and rely on different indicators more for trading SPY and Qs in the overall market than an individual name.
Yeah, I would agree with that. I think they're looking for levels that hold, and they're looking at indications where, and this is in the Qs and the SPYs, or in the ES futures, they're looking for levels where selling is drying up, buying is drying up. On my blog, the Trader Feed blog, I talk about the volume that is occurring, every single transaction, the volume that's occurring at the bid price, at the offer price, so you can literally see where buyers are being more aggressive and lifting offers, where sellers are being more aggressive and hitting bids, and you can see that dying out. You can see that expanding. They're looking at factors like that, particularly the people in Chicago I used to work with who are doing the day trading in the futures. Less emphasis on order book than years ago.
All right, let's see here. Had a few more come in. All right, it said you talk about innovation and doing new things. If a trader has a scalping personality type, which is successful and working, is it dangerous to fight that and explore new styles?
That's a good question, and it's not really having a scalping personality type. It's more an issue of how we process information. And some people are big picture thinkers, they're slower and deeper. Some people are faster processors. They see things broadly and quickly. And so it's really our cognitive style, how we best process information, that reflects our strengths, or that determines our strengths in terms of trading. The slower and deeper we are, the more we would think of investing rather than trading. So I think there is danger in getting away from our strengths, what we're good at, but that doesn't mean we can't adapt those strengths. So we can be fast thinkers, and we can use that fast capacity to look at more things, different things, and really improve ourselves as traders.
All right, thank you. Let's see, we got time here for a couple of more.
Awesome.
One question for Mike: when is your next book going to be published?
Oh God. So I have no comment on that. I wrote my first two books without children, and it is a lot harder with children to find free time. I don't know how Dr. Steenbarger finds all the time to do everything that he does. It's remarkable.
It's because my kids are growing up, Mike.
I don't know. I think it's more than that, but we'll let you know, but not anytime soon. Having said that, I do think we do some. I'm hearing that our YouTube channel, SME Capital at YouTube, which does take up some of our time, we are sharing in depth the things that are helping traders from our desk, what professional traders are doing to excel. And for those of you who like video over reading, that's your spot.
All right, and what indicators do you rely on for trading the indexes? They're asking QQQ, ES futures, SPY, etc.
You want to go, Mike, or you want me to?
Hard pass to you, Dr. Steenbarger.
Yeah, and you'll see a lot of them on my Trader Feed blog. Indicators that I use for SPY and for the ES futures include the NYSE tick, T-I-C-K. On most platforms, it's $tick. There are also uptick and downtick measures for Russell stocks and for the S&P stocks. I use the Sierra Chart platform as a way of accessing those data. What that tells you is at every moment in the market, this is multiple times per minute, how many stocks are upticking, how many stocks are downticking. You can see the flow of buying and selling very nicely in equity markets through the tick measures. The other one is what I measured, the volume that I mentioned, the volume that is trading at the offer price versus the volume trading at the bid price. That's often referred to as a delta measure. There are a number of blog posts I have about that so that you're seeing who's lifting offers, who's hitting bids, and most importantly, this is really important, when you see lots of hitting of bids or when you see a lot of lifting of offers, how does that impact price? When you see a lot of people lifting offers and price can't go meaningfully higher, those buyers are going to be trapped. And when you see sellers hitting bids, and price can't go meaningfully lower, those sellers are going to be trapped, and that forms the basis for the next market move. Those patterns have been setting up beautifully in recent markets, and I have a number of posts on the blog about that.
So I'll just leave you guys with this, if I might. We are in difficult times. It is a very challenging time for all of us. One of the really best podcasts that I've listened to that has given me tremendous inspiration and hope over the last quarter was a podcast between Peter Attia and Rick Elias. Peter Attia is a medical doctor with offices on the West Coast and the East Coast. And he had as his guest Rick Elias, who is an entrepreneur and well-known business person. Rick happened to be a passenger on the flight that took off from New York and was going to Charlotte, that was flown by Captain Sullenberger, which we all know ended up landing in the Hudson River. They take off, things are fine. All of a sudden, there's this huge sound that goes off, and Rick is not sure what it is, but looks at the stewardess, who is completely calm. And it's the sound of, one of the engines catching on fire. And feels the plane turn, and again, the stewardess is fine. But then things start to get a little bit different, and he can feel the plane starting to descend a little bit, and he looks at the eyes of the stewardess, who is in complete panic, and he knows for the next 90 seconds certain that he's going to die. And during those 90 seconds, he was taught a lesson that's completely different than you would think. He experiences something that he just wouldn't think you would experience during that moment. He expected himself to be really scared. And he said, I wasn't scared. That wasn't the feeling I had. The feeling that I had during those 90 seconds when I thought I was going to die was of sadness. It was of immense sadness that the things that I didn't get done, of the regret that I had for not doing some of the things that I didn't get a chance to do. And they landed, and he was safe, and he was gifted with something that can help all of us in a very, very difficult game at a very, very difficult time in our lives, which is he was given a gift to play a game of no regrets. If you want to be one of those guys who becomes a really great trader, then every day you're gonna have to get after it and do the reviews and do the work. And whether you make it or you don't, do one thing for yourself, which is don't have any regrets. Play that game of no regrets.
Wonderfully said, Mike. I couldn't agree more.
I couldn't agree more myself. Thank you so much, gentlemen. It was fantastic to have you. One of the best presentations today. We hope that we get to
Awesome.
speak with you again very soon.
I look forward to it. Thanks for having us. It's been wonderful working with Mike. It's been wonderful working with successful traders. It's been wonderful reaching out to the community of traders through Money Show. My email address is on my blog, the Trader Feed. If you have questions, feel free to be in touch. We want to see people being happy. We want to see people being successful. But most of all, we want to see people being safe and taking care of themselves in this difficult time.